Hey guys, it's the Market Sniper here. How are you doing? Welcome indeed. Short video just to bring in one key concept and get you focusing on an index outside of the US indices in terms of where the world is going, ref the Great Reset, and a couple of reasons why. So the place I'm going to be talking about is Singapore. Singapore largely positioned as the Switzerland of the Grand Asia in any bifurcation world, in any environment where, and we talk so much and it sounds so nihilistic and we're so bearish and the West is going down, but as far as other things going down, that money that deflates and runs away, where will it go? And we've highlighted the Middle East as a conundrum and an area where in the frenemies of the chosen one nation such as Saudi, Dubai, etc., there's certainly something going on there, but they don't strike the right kind of tone for me. In fact, nowhere does. But Singapore is going to play a role, and it is going to be a Switzerland for Asia. Broadly speaking, as China's power and role continues to climb, and yes, it is climbing, and Russia and China as a conurbation are going to actually do better, in my opinion, than Canada, America, Commonwealth nations in this next economic malaise, which could be accompanied with global conflicts as well. And that's not a moral statement, by the way. I'm not assessing that I'm going to be super happy with the people that might be dominant nations compared to when it was America per se, but I do feel that the same parasitic entities have penetrated all over the world, and there is going to be a shifting of the money to the east, as with the gold, as you can already see in the different prices for silver and gold on the Shanghai exchange versus the COMEX, and this I expect to get even more peculiar and potentially lead to this permanent arbitrage until money is drained. Gold being money, silver being money, drained from the west to the east. But anyway, back to Singapore. Singapore broadly does not flex its muscles in a military capacity, much as the Swiss neutrality. Switzerland, of course, square flag nation, all the intelligence agencies all hold up there, and no doubt the World Economic Forum and many others. And I'm not putting forward any of these nations as virtuous places. Singapore has a lot. It was pretty poor environment to be in during the draconian clampdown in the event that may not be named, March 2020, etc. However, as a financial base for people that will be uncomfortable with money in China, communist China, wealth in communist China, Singapore strikes an easier balance generally for positioning, as part of Asia broadly, and Australia not too far away, Vietnam, Indonesia, a lot of demographic. Indonesia has got the demographics of age group, by the way, that is probably going to lead to high growth as well. All those workers coming into their most productive era. They're generally that was around 26, 27 when we were getting all the boomers retiring in America. So demographics are also working against the West, and population decline. Of course, we're getting an infusion of special immigrants. Unfortunately, they're not all brain surgeons and rocket scientists, I'm afraid to announce. And yeah, there's certain reasons why those particular immigrants will be coming in and who's bringing them in. But let's stay well clear of that and stick with the Singaporean argument. You have the likes of Jim Rogers already in Singapore. He's taught his children Mandarin for the future. I don't care if to go that far personally in terms of kids learning Chinese. I think languages will become more universalized. We'll have tools and everything for that. Obviously, it helps, especially if you're going to be in the area. But Singapore strikes me as the place where you're going to have the least mutually point of acceptance for a financial world. Remember, London is going to lose a lot of its hegemony. Europe and New York are going to lose. They're still going to be large local cities of the financial realm. Don't forget, they special countries within countries. That's right, Washington DC, District of Columbia, London, and of course the Vatican are in fact, the London being a square mile that isn't even part of England and has its own law. The Queen needs to ask permission to even go there. So that's how strong your banking cartel with their crazy little legalese, maritime law, etc., how they've strung that up. Singapore is going to potentially be one of those places that is going to thrive in the environment of the contraction of the Western fiat and debt system, and debt systems generally. It's not only the West that has had problems with debt. It is a leper colony in the world of kiss the chief leper and do the debt game almost universally, although some would say Russia, for example, having since restructured, is quite low. Maybe countries like New Zealand are not particularly bad, but they're working at it. Give them time, etc., etc., in terms of those financials. So what's the trade? What goes up and how will it be? Well, many people know that the American stock markets have been where all the tech and where everything gets boosted, and of course the best tech gets stolen and put in Israel, Tel Aviv, where it's sold on to all the other nations, and they can trade and profit after it. There's a complete theft, parasitic type relationship that goes on there, but there's still going to be a foundational hub where it is all going to be developed, if it's no longer the US, or it is less so the US. And again, I would put Singapore forward as a likely potential place as the center of the universe moves towards the east, away from the west. And why do I make all these speculations? I'm trying to be a futurist. I'm trying to look forward. Where's going up when so many things may go down? And that is part of the process of seeing the opportunity, of course, that also goes with the great reshake up of the powers that be. And as I say, this isn't going to be overnight sensations. So turning to the charts on what I base this for, we are actually very bullish on the Straits Times Index, which is the index of Singapore, the nation, that was founded on land that was pretty damn marshy, pretty single-minded, quite draconian, but very capitalistic of intent in some ways, high of compliance, and I've already alluded to that not being particularly attractive to me as a libertarian, but in other areas having a lot going for it. It's not perfect on the debt front either, and we'll touch on that. However, I don't believe any nation is. So with our HVF drawing tool, having turned to the charts, I'm going to show you something on the daily chart that looks like an upside HVF setup that is already triggered, and I'm going to highlight that, you know, it's got already a target on the, sorry, I apologize, weekly time frame. We're on a weekly time frame, so we're not just basing this off a daily chart. We've got a weekly time frame chart here, which is probably going to be of a market that's going to see a lot of assets relisting, maybe delisting in America, delisting in London, some of it coming away from Europe, Chinese assets potentially leaving Beijing, having the permission to go to an acceptable nation that will likely still respect a large amount of the degree of compliance that China as a communist nation likes to have. And this is giving us 3,700 from a level of about 3.2. We've been talking about this in our community, and we've been getting long for a while, and it's continued to walk out in our favor after this breakout candle bar. Nothing too unbelievably spectacular here in terms of a traditional setup, but here's the big rub. What I'm going to do next is I'm actually going to show you this setup in a much bigger time frame and the context that occurs in technically, as part and parcel of my reason as to why I feel the STI index, the Straits Times Index of Singapore, could see net inflows of money and be one of the outperformer indices for the next decade and a half, going on even 2 decades. Bear in mind, people are putting money into ETFs all the time to track stock markets, etc. And most of that has been attracted into the US stock markets, and the US stock markets have done exceedingly well. And of course, as you know, tech has been largely developed and capitalized out of the NASDAQ stock market exchange, and it's generally been one of the best to be in. If we start to see a reduction in emphasis and more split listings, and then new businesses being found and listed that are all coming on, this is the index I would most guess that it would take place at. inside the legal realm of that which has been sketched out, I think it was Li Keqing of Singapore. So let's go and take a look at this chart on the 3-monthly time frame. So I'm actually going to take you from a weekly time frame to a quarterly. That means every candle now represents a quarter of a year. A quarter of a year, that's right. And now we still have our old setup there. I'm going to move this around and pop it in there. And wait for this to draw. And here's what I like about big time frame charts. Big time frame charts and candlestick charting show you a lot. And remember, each one of these candles is 3 full months. So just 4 of these candles is an entire year in its overall structure. And we have just demonstrated to you that we believe we have a weekly setup in that little blue zone that I'm drawing for you right now. Well, what is the nature of the quarterly setup? So we've gone from weekly to monthly, that's a 4x, and then we've gone 3 times the monthly, that's to a quarterly time frame. We have a macro upside HVF structure here that is far more interesting for those that like 10 baggers and big moves. And we've been, as I say, acquiring in and around the 3,000, 3,100, 3,150 level, looking for an overperformance run to the 8,635. Now, many of you will be looking at the index and saying it's not particularly interesting. I mean, there's even a few big banks in there. You know, we're not big bulls banking systems generally. So what's going to be the driver? Well, I think the asset allocations going more eastern, moving away from, as I've already described, the likes of London, the likes of America, and the collapsing West, into a area which is going to be more broadly accepted as the new Switzerland stroke neutral capital listing market of choice. And an 8,635 run from a 3,000 call, I think you'll admit, for a mature first world indice market becomes a much more ballsy call. And of course, bigger charts, bigger targets, and that's part of what we've been doing. And I want to highlight this piece of candlestick work that's been going on in here. You can look at these, and they are incredibly tight little bodies. We refer to this as funneling. This is super tight, low volatility price behavior that occurs when you are in the third and final impulse of our squeezing structure. That tends to be followed by a very strong impulsive candle to the upside that commences a breakout that sees fast moving price behavior with very tight stops being permissible and highly expansive moves to the upside be potentially possible, and of course deeply rewarding. This is the territory of high rewards with pretty low for stop placement risks. So short risk, long reward. And as people have been collecting on our axis over here, and with super tight stops that are obtainable and possible, you will find yourself in a situation where you will have very attractive risk reward fundamentals. So let's just see if we can grab one of these risk reward fundamentals and bring it closer to where we see this potential. And we would see here, we would also expect overperformance to this structure. I'm going to highlight that risk reward right there is almost 31, 1:31. And I would argue that anyone entering now could optimize that stop to a point where you could be closer to 60:1. And I would suggest even a partial close only at the target in the good event, the very successful event, that we reach such a target and it won't be next week, next month, and not even likely next year, but in a reasonably quick time frame for the reflection of the gestation of this period. The Singapore stock market was there in October 07, and you haven't gone higher since. You haven't gone higher since. The high was 3,906. You are still able to enter this market at the 3,300 level, even though you're later than our community members that have been on this trade for a while, and we've been watching this for a while. So my expectation here, let's go back down to hiding that, is that in actual fact, you have had 1, 2, 3, 4, 5 quarters, and you're in the 6th quarter of incredibly low volatility behavior that is deeply, deeply typical of something that's going to move violently forward in the not too distant future. And that's just to give you a little bit of an idea of the volatility. I will take you back down to the weekly to illustrate that volatility level one more time on a lower time frame so you can truly appreciate it. But this is super low vol, and it is typical of funneling, and it is an ascending structure of HVF, Hunt Volatility Funnel. And you can find out more about that and all the other trades you're not hearing about, by the way, in the very first link below. Click it, book a call, a friendly face, go through the details, demonstrate our platform, have a chat with you. There's absolutely no obligation and 100% 14-day money-back guarantee without any requirement for a reason therefore. So we look to take the risk out of people, recognizing that we're serious about delivering value in reset time and how. And we give quite a fair bit away free for people on YouTube to help raise them as well, hopefully with good winners and without being 100% perfect in terms of everything that we say. So that there is the chart. Some of you might be asking, well, there's more to just the index going up. How's the Singapore dollar as a currency generally done? Now, despite what the dollar milkshake theory gang will have you believe about the omnipresence of the dollar, and just before I leave this chart, let's just go to the weekly. And I'll come back to that point. This will illustrate in a far more clear-cut way the extent of that volatility compression. I'm going to compress much like if we have the entire pattern in the structure here. You will see that we are very low on the volatility side here. Now you can get high volatility on collapses, and they can also be at the bottoms before climbing, but usually very low volatility is a precursor to an upside move. So let's go to that third chart that I'm looking to talk to you about, and that's the currency. So despite, as I was saying, the dollar milkshake guys like to tell you, the dollar is not omnipresently dominant against the Singapore dollar. In actual fact, I think there's only really been one period where it was consistently strong against the Singapore dollar, further helping me make my case that, in fact, there is some real credibility. People hate unstable currencies, and in fact the Swiss franc is one of the currencies that consistently outperforms the dollar over most time frames and over the long time frames, with very rare and short spells. This is a reasonably lengthy spell where the dollar actually appreciated. So we're looking at the US dollar, Singapore dollar over the same quarterly time period, and here's what we find. Generally it trades down in long, languishing, consistent bear trends, and it's made a new low, and you had a kind of a recovery here, and you've tapped out on resistance there, and you are in this channel. And my expectation would be in the longer term for that channel to break to the downside lower down and to make a new low in due course. Not again next week, next day, or even next month, but in due course, as part and parcel of an ongoing consistent trend of proliferation at a higher rate of dollars and slightly more, not overly so, but slightly more sound principles of money that sees the likes of Jim Rogers set up shop in Singapore. So what have we told you today? We've told you that the Singapore dollar overall is an outperformer, and that the dollar rallies are relatively lower than the dollar capitulations to the Singapore dollar. These are your rallies. Of course, since there and down currently at there, you can see that you've gone from 2.3 to 1.3 and at an absolute low of about 1.19 that I am suggesting will see parity fail. And again, not next week, we're looking at massive time frame charts, but overall we'll see parity fail at some point in the future for the currency. So you're looking at a destination that is not involved in the military-industrial complex of invasion and annexation, pursues broadly down the middle of the road, not seeking to take a side too aggressively in any of the major nations, but is broadly left alone, unlike Georgia, where they're planning a color revolution, much like 2014 Ukraine, as it seems, which happens to, unfortunately for Georgia, be on the border of Russia. And hey, why not have another site to plant missiles and to threaten the Russians with, and maybe just unhinged, a la Newland in 2014, another legitimately paid elected president for one. Singapore doesn't suffer from that. It's not on Russia's border, and it is well away from the direct military intervention typical of the US military industrial complex. Not to say they couldn't or wouldn't try, but it's very, very close also to China, and that level of intrusion would be almost suicidal. So it's safely ensconced away from the warmongers. It has a prudent financial system structure broadly in terms of law, whilst it's not perfect in terms of indebtedness, and I wouldn't vouch for anybody's banks of every nation states. It puts itself forward as a serious financial hub, and has done for many, many decades. As a result, one of our big calls that you can enjoy and watch is that the Straits Times Index is going to chronically outperform and run through the 8,300 level in relatively short, relatively for the time frame and the targets for what is a very mature stock market, relatively short time frame, and could make up part of your ETF strategy and your investment area zone for long-term upside, with the benefit of a currency that typically dominates the dollar. I hope that's been interesting, and I'm going to finish here for you. We will be talking about precious metals again as the markets are delivering. We're looking forward to update you, but as a little change of tack, go and investigate for yourself the area of Singapore from an investment perspective. You don't have to live there. You don't have to fall under their rules. Other than from an investment perspective, and start putting the Straits Singapore Times Index in your watch list. Till next time, don't forget, click the link below if you want to book a call and have a chat. And we look forward to updating you on other events in the precious metals and all the other areas in due course. Bye for now.